Hi, welcome to another installment of our Service Spotlight. This month, we're going to be highlighting project profitability. Is every single one of your projects making money? And if so, what's the margin? What's a good target margin? How do you even track that? And how do we, as your bookkeeper and your accountant, help you understand these project-specific numbers? I'm Morgan Boudreaux, Vice President at Business by the Book. We're a full-service bookkeeping and accounting firm focused on helping interior designers reach their financial and business goals. Thanks for joining me today. All right, so here's the big question. Are you making money on every single one of your projects? And if you are, what's the profit margin? Meaning, after you pay for the product and any project-specific expenses, how much is left? And what percent of the total income is that? That's what your profit margin is. And it's important to understand what your profit margin is on every single one of your projects because it's going to help you be able to determine what type of projects you want to take on, which ones are the most income generating, and which ones are drains on your business. All right, so the first big piece of this is understanding what profit margin is. So here's the calculation. Profit margin is your income minus your COGS or cost of goods sold equals your gross profit. Then if you take out any project specific expenses, you're left with your net profit. And your net profit of that project divided by the income of that project times 100 is the profit margin percentage. And so it's really important to understand how this works. So if you're looking at your profit and loss statement, this is the same way that this is laid out and in order to figure out what your net profit is for your business. But we like to look at it at a project specific level. So you have your income at the top, then your cost of goods sold or COGS. So that's any product that you are purchasing to resell to your client. Is the gross profit. You're used to seeing that line item on your P&L. Less any expenses is the net. And so it works the same way with trying to determine this on a project level. So if we keep moving forward, a question that we get a lot is, well, what should my profit margin be? What's the goal? When you look at the research, when you look at the different articles, there are lots of different markers for this across, expert industry specific guides. So I have a few references here. Style Row recommends 40% profit margin. Fourier recommends a gross profit margin to be between 35 and 40% and a net profit margin between 20 and 30%. Design Files on their blog recommends a 35% profit margin on products at the very least, and then recommend aiming for a 40% profitability on each project. And then other sources say the gross margin should be between 40 and 60%. So you can see we're sort of all over the place with the recommendations. So I sort of, did some averages of the resources and determined that for the sake of this presentation, we're going to say that the gross profit margin, a good target is between 35 and 50%. And then a net profit margin, a goal would be 20 to 30%. Okay, and so let's work through an example of this. So if we wanted to just look at the gross profit, because maybe you're not ready to start tagging project-specific expenses yet, or you're not sure what that is. So you can see here in the example, I have income and I have it broken down into product shipping and service, which is standard at Business by the Book. You can go more. We at least have these three subcategories. And you can see the total income there. And then we have the cost of goods sold broken out, product, sales tax paid. Like if you bought something retail, we would include that here. Shipping and freight and any subcontractor labor that's specific to this project. And so you can see that the gross profit, it was $111,000 out of $271,000, which is a 41% gross profit margin. And so if you remember in our goal range, we said that a great goal gross profit margin is 35 to 50%. And so this project is sitting right at 41%. So that's doing great. So if you wanted to add in the expenses to find out the net profit margin, you simply add in the expenses here. So you can see that there's a little like $17,732 of project-specific expenses for a net profit of $93,000. for a net profit margin of 35%. So this is the actual profit margin is 35. And our goals were 20 to 30%. So this project is doing great based off of those metrics. So what kind of expenses are project specific? We get this a lot because how do you even know? What does that compromise? What is that what does that entail? And so there are things like anything related to that project's install day. This could be lunch, supplies like picture hanging supplies, styling goods like the lemons that you're putting on the kitchen counter, the wine glasses that you're setting in the china cabinet, those sorts of things that maybe you're buying to kind of spice up your install day, make it really special for your client. And then any bookshelf accessories, those sorts of things that maybe you are going to leave and let them buy, and then we would move them to COGS and those sorts of things. So it's just really important to keep track of everything that's related to the project. If you are really, really tracking your mileage or renting a truck, or if you're in a city and you're going to take an Uber, or have additional support for transportation for your project, that is a project level expense. Samples for your client that you have had all throughout the project that we can tag to your specific project, any travel for them. And then if you really, really wanted to break it down, we can break out your hourly employees, your salary employees, any professional fees like bookkeeping or coaching, those sorts of things per each client. However, those things require more support, more breakdown. And so that could impact your payroll fee and that sort of thing if we're going to go in and tag the time or the salary breakdown by project. And so project profitability drives the success and growth of your business. Without it, you don't know if a project was profitable and if your time and resources were allocated correctly. You cannot see any pain points where money was lost, like with your markup, shipping, or design fees. It's difficult to make decisions on pricing for your products and services for future products because you don't have any data to base the decision to increase or decrease your prices. And it's impossible for you to determine what an ideal client or project is because you don't have the data to know whether or not it was profitable. You can take on projects that are not profitable if you want. It's really hard to have a successful business on non-profitable projects that are just for friends or favors or networking, those sorts of things. But you want to be able to choose to take on a project that you're not going to make money on. You don't want to have to guess at that. And so what do we do to help you with this and to provide these project profitability reports? So we're going to make sure that all of your cost of goods sold transactions are tagged to a client or applied to a purchase order or bill. So sometimes I know that you're not doing creating purchase orders, and all of that is a whole nother subject. We have a separate service, a separate video like this that talks about purchase order management. But so if you don't want to go that route and you just want to tag the expenses to the project in QuickBooks, we can help you with that. And that way you know exactly what was spent on a project level basis. Then we provide project-specific reports that show you the revenue, COGS, expenses, and so then you have that net profit number for each project. And we help you sort of walk through what that means. Where is there a gap? Where are you not making money? Did you lose money on shipping because you're doing flat rate shipping and things are more expensive in a post-COVID world, and so you need to increase your flat fee shipping percentage, or you didn't. You forgot to invoice for the updated freight amount once you got your final bill from their vendor. And so we're able to see the holes, the drains, when we have all the information, and we can talk about the options you have to improve so that your next project you can recoup or just at least see a positive profit margin. And so if you want to learn more about this service, we would be happy to chat with you about it. You can reach out to Ashley, our Director of Client Services. You can email her here. I'm also going to drop her Calendly link right here below. And so you can click on that and directly schedule a meeting with her to talk about adding project profitability to your recurring bookkeeping services. So I really hope this was helpful. If you have any questions about the different services that we offer or just project profitability in general, you can contact your account manager. You can reach out to me. You can reach out to Ashley. We're all here to help, and we're excited to help you feel empowered about your finances so you can have a successful business. So I really appreciate your time, and I hope you have a great day.